welcome back to the program, everybody. Couple housekeeping things. So next week, I'm recording this in real time. So today is April 30th. Next week is the Berkshire Hathaway meeting in Omaha, Nebraska. So I will be there in attendance, hopefully, if all my flights are on time and all that. So I will be there next Saturday for that. And hopefully I'll be able to record an episode on Sunday, letting you know how that meeting goes with Warren Buffett and Charlie Munger. Always excited to do that. Not really sure how many of those I have left. Warren Buffett is 92 years old and Charlie Munger is 99. So, this is pretty amazing being able to still be able to do this. But looking forward to giving you an update on that. If you follow us on social media, on Instagram, I'll try to post a bunch of stuff on my story, just kind of letting you know how that goes and keeping you updated on that. Should be a good time as always. So this week in the market, another decent week for the Dow and the NASDAQ. I mean, the NASDAQ is leading again. NASDAQ's still up 16% for the year. S&P is up 8% for the year. So this wall of worry that we've had all year long, we continue to have a pretty good year. This past week, there were some really good earnings reports from the likes of McDonald's, Coca-Cola, Procter & Gamble. These are all companies that can pass along cost increases to consumers, and consumers have been able to kind of absorb that for the time being. So we'll see how that continues to go. Meta had another good quarter. It's kind of amazing. Meta, formerly known as Facebook, has had one of the best years so far of any company. Mark Zuckerberg has definitely gotten to where he is getting rid of expenses and making that company very lean and mean. And so stock shareholders are very much appreciative of that. We had earnings from Google, and we also had earnings from Amazon this past week. And they were decent. They were good earnings. Amazon had good earnings, and the stock jumped after hours. And then when they got on the conference call, they kind of killed the momentum of the stock, talking about how they were unsure of, what was going to be going on in the next quarter, right? So it's like, oh, hey, we had a great quarter, but there's a little uncertainty on what we see coming up in the next next 3 months. And so that, just halted the momentum of the stock. I will say it's interesting when you look at the Microsoft, and Microsoft had a great quarter, Microsoft quarter, Google quarter, Amazon quarter. The term AI was used so many times. It's just, ridiculous as far as how much of their future growth, what their thoughts are on the impact of AI. I mean, it was very apparent in all of their conference calls how important AI is going to be to the future of these companies. And it's going to revolutionize, a lot of their business segments. So one of the things, or one of the areas that has been the driver of their profitability for a lot of these companies, for Google, for Microsoft, for Amazon, has been their cloud service, right? So cloud services makes up a hugely profitable segment of all of these businesses. And, they're showing not weakness, but a plateau of growth on those platforms. They still have growth, but it isn't as fast and it isn't accelerating like it was over the previous couple of years. And so, they're looking towards AI to be kind of that next growth segment for them. And it really is going to change a lot of positions, a lot of jobs. It's going to make its way through many areas of the economy, specifically customer service. I mean, I've even seen articles already about how it's going to, replace financial advisors and real estate agents. And I mean, so all of these articles come out that, everybody's going to need to find work somewhere else. Maybe I can create like a hologram AI professor version of me, so I don't even have to show up to class anymore. Maybe that's in the future. Who knows, right? But there's just all these areas of growth that the companies are expecting, and it really is like, who's gonna make the impact and who's gonna get there first type of deal. But we'll see that that this is still kind of a work in progress. And so you have that, and you have those good earnings. There's a company called Impinj. We've never talked about it on this show. The symbol is PI. That's an example of a company who had horrible earnings. And one of the things they did that you don't want to see companies do is a quarter ago they said, "Hey, we're going to be able to beat all our earnings for the year, and we're gonna do better than we thought they were." And then 3 months later, they come back and go, "Oh no, just kidding. We're not gonna do as good as we thought we were, or we're gonna have to guide down." That is really what you don't want to see your companies do when it comes to earnings. There's still a lot of bank uncertainty out there. Not really with kind of the banking sector at large, but just some of the ones that were having issues that we've all been aware of. First Republic Bank, is probably going to get taken over by the Federal Reserve, and so that stock got just completely beat up on Friday. And I mean, that stock was $150 2 months ago, and I think it's $3 right now. So just interesting stuff going on in corporate America. Never a boring moment. This next week, we have still some good earnings coming up. The most important one for the week ahead is going to be Apple. We have Starbucks reporting, and then we also have a Fed meeting coming up this week. So on Wednesday, we'll get the Fed report. The expectation right now is that there's going to be another 25 basis point increase to interest rates. And so that is kind of what the market expects. But again, the important part is going to be the press conference when the Fed chairman, Jerome Powell, discusses what's going to happen in the future, right? Are they looking at other rate hikes, or are they going to pause rate hikes? And so that's kind of what everybody is waiting on. So the market is kind of looking at this and going, okay, well, if the Fed's going to pause, that'd be a good thing for your technology companies. But we are definitely closer to the end of the cycle of rate hikes than we were a year ago. And so you see kind of the stock market looking past this and seeing, okay, what is the normal going to be after this is done? And so, it's going to be a jam-packed week with a lot of information, but we will see how it ends up playing out. And, I'm for me personally, and the money that I manage and the stocks that I own, I've been very pleased with the earnings reports for the most part of some of these companies. And with everything that's going on, it seems like the consumer's still strong, and a lot of these companies have been able to do things to help, meaning they're cutting expenses. Now, you can't cut expenses forever, and there's some companies that need to be a little bit more aggressive on that. Amazon, for instance, we've discussed that. Google, they really need to get their expenses under control. The Apple report this week will be extremely important. It is the most valuable company in the world, right? You go look at their market cap, it's the most valuable company in the world. So what Apple has to say, man, it carries a lot of weight. And it's in every single mutual fund. It's in every single index. I mean, if you go look at your retirement account, I promise you, if you look up some of those symbols and you look at their top 10 holdings, Apple is probably going to be right there on a lot of those, in a lot of those that you own. And so Apple and kind of what they're saying is going to be very important. They've just opened some stores in India. And so, how are those stores doing? Those kind of things are going to be important. I don't think it's going to impact what their numbers are for last quarter, but it'll definitely impact their numbers for the coming quarter. So hearing what they have to say on that is important. So if you're watching the video of this, you'll see behind me, I have a ton of annual reports. These all just came in, getting busy reading on those. And I thought today's episode would be a good time to discuss annual reports, why they're valuable, and really just kind of nerd out with you a little bit. This is definitely more of a kind of a analyst type call. But even if you're, managing your own money and you're looking to be a little bit better, I want to share with you some things you can do when you're looking at annual reports and how you can use those to kind of improve your ability to analyze companies and just kind of walk you through what I'm looking at. And so I found this interesting. I've been reading annual reports for a number of years, and so it's got to be a little bit easier for me than somebody who's just starting off reading annual reports. And so there's just a couple tips that I think would make it easier for you, because every year, if you're an investor in a company, you're going to have access to the annual report. They're probably going to send you a proxy statement. So we'll discuss what a proxy statement is. But normally they come together. Normally you'll get a package, and sometimes they're delivered electronically, but you'll get a copy of the annual report. You'll get a copy of the proxy statement. So the annual report, just for definition purposes, is basically what happened to the company in the previous year. Now, a lot of times they will also include a shareholder letter, which is what I think is like worth its weight in gold, right? I want to read that shareholder letter. I want to hear from the CEO. I want to hear what they're working on. I want to hear what are their objectives for the coming year. What are some challenges they had in the previous year? How are things going? I get very wary when the company doesn't include a letter to shareholders. And I want to give you an example of that. So I read if I'm going to invest in a new company, I want to read their annual reports and I want to read their letter to shareholders. It's part of the things that I do when I'm, looking to invest in a new company. This is kind of the homework portion of me going and looking into these companies. And so I'll go look at their annual reports, and you can pull them up. So any company that's public is required to do annual reports, and most of them, all of them have a website that's going to be like name of company, investor relations. So if you want to, look up any company, go to Google, type in Starbucks, investor relations, Big Lots, investor relations, Apple, investor relations, and that's going to bring you to a page that's going to have plenty of their old annual reports on there. Starbucks keeps 20 years worth. And so a couple of years ago, I was doing some research, and one of the ones I looked at was Big Lots. And so I'm doing some homework on Big Lots, and I learned from the annual reports that their number one customer, the person that they kind of build the store around, they'd given this person a name. They called her Jennifer. And so if you go back to 2017, 2018 annual reports, they'll talk about what is that customer looking for? How are they doing how are they looking to build the stores around that person? How do they get more people in that kind of hit these same metrics? And so these companies are using this data to be able to kind of have the direction of the stores. Well, then you look later on, like 2019, 2020, 2021, all of a sudden they no longer do annual letters to shareholders, right? The CEO is not talking to you anymore. They're not doing a letter. They're not saying what they're trying to do. And I go look at the stock price, and I know it's not a direct correlation, but in the last 5 years, Big Lots has gone from $60 to $8.99. And so I'm like, okay, what's going on with this company? 5 years ago, they're updating you on the customer. They're telling you what kind of customer they're going after. Now I'm looking, they don't do that anymore. They're not updating you on what the company strategy is, the stocks in the toilet. I'm sitting there going, it's not a direct correlation, but I have to believe that there's some things going on. Like, why would you just stop that? Right? Because the annual letter is a very important time. It's one of the only times of the year that the CEO of a company can talk to you directly as a shareholder and say, hey, these are our goals, cut out all the noise, all the media noise, and write, a quick 2 to 3 page letter on these are our objectives, and this is where we're going as a company. So when they don't do that, it makes me very wary. I'm like, why did you not do a letter to shareholders? Right? Like, what's going on? How did you not have time to do this? And it's a big red flag for me. So it's a big red flag. And so, it's just another piece of information I use in my tool belt, so to speak, on things that I'm looking for from a company. So now we'll change companies and we'll go to Starbucks. So years ago, I'm reading the Starbucks annual report. I'm reading their letter to shareholders. And they're talking about how many stores they're going to be building in China. and they're talking about how we're using all of our profits. We're building stores in China, and it's going to be our largest market. The letter said that the Chinese consumer spends more than the American consumer. And I'm reading this, I'm going, man, this is going to be a big deal, right? Like, this is going to be a big deal when these stores come online. And of course, the stock stayed low because their profits, they were spending so much money. But if you read that letter, you knew that they were spending money on these new stores. And now, today, I believe Starbucks builds a new store in China every 9 hours, which is just insanity. And so the stock has started to do well. Those stores have started to come online. Their profitability has increased. Their sales have gone up. And so I got that information in 2015, 2016, just based on reading the annual reports. And I had to be patient. For a while, for about 12 to 18 months, the stock did nothing. It stayed around $55 to $60 a share. It didn't move hardly at all. But then when those stores came online, all of a sudden the stock's at $80. Right. So I'm sitting there investing as much as possible while they're building those stores on the expectations that this would happen. And so, it's not that it works every time, but doing good homework allows you to realize what you're invested in. You understand the goals of the company, and you can, if you believe in it too, and you think it's going to work out, you can invest right alongside them. And so that annual shareholders letter is key. And if you haven't invested in a company yet, like, I would encourage you, go to that investor relations site and start reading, go back and start reading what their goals were 10 years ago and kind of just start reading and catching up, right? So you start reading maybe 2012, 13, and you read, the last 10 years, and you see how they went. And that can be a very good source of information for you when you're looking and researching companies and deciding what kind of companies you want to invest in. So that's like number one for me. That's the first thing I'm doing is I want to see. And then if I decide that I like the story of the company, I like where they're going, that's when I then start analyzing the financial piece of the corporation. But you have to kind of, you're an investor, right? So an investor is a part owner in a business. And if you don't like the direction the business is going, then you probably shouldn't be invested in it. So this is always my first step in looking at new companies. It's one of the ways where, like American Express, they talk very specifically about how many young generation, Z and all these younger generations are their fastest growing segment of their customer base. How many people are signing up for their cards? And so the same thing with Starbucks. I'm looking at this and I'm going, okay, well, they're going to have all these young consumers. They're going to grow with them. Those people are going to get raises. They're going to be used to using that card. They love the benefits. They love being able to go into their lounges when they're at the airport. And those are going to be profitable, consumers for the next 20 years, 30 years for American Express. And so there is a lot of information you can gather from that. And then you can start looking at the financials, which we've had many episodes that discuss that. So the other thing that comes with the annual report is the proxy. And so the proxy is when you're a shareholder, you get to vote on the direction of the company, right? So you get to vote on, who the directors are going to be. What are some of the things that they are, maybe dealing with, or some changes in the company? Who's going to do the audit? What, should they have an independent chairman? All of these things. So the proxy statement gives you the backgrounds of the board of directors. It tells you how much they're being compensated, how much the CEO is being compensated, and you get to vote on whether you think these people should be board members, whether, so you get to go through that. So the proxy is going to be all the information you need to educate yourself to be able to vote on that. So normally those come together. You get the annual report and you get the proxy at the same time. And it is important. A lot of people don't vote the proxies for the shares that they own, and you should. I mean, it's part of being an owner in a company, and you should do it. So just keep that in mind, but that's really kind of how it's set up. But the annual reports are extremely important. They're easy to access, and I would say that, you need to read through a couple to just get a baseline of like what you should be looking for and what somebody, a company that's doing a good job on them versus somebody who's not. So, pick out some of your favorite companies, pick out 5 and go read their annual reports. But a lot of times, like the mistake that most investors make is they read one. And if you just read one, you don't know if it's good or bad, or like you don't have anything to compare it to. And so that's why, I'm telling you to go back and read a couple from years ago and, read at least 5 years worth to just kind of get a baseline of what this company has been trying to do and have they been accomplishing it or not. And it gives you a little bit more context on how the company's really doing. Now, I'm going to give you a spoiler alert. But if you go read 2020's annual report for any company, I assure you that it's going to start with, this was a difficult year. COVID was hard. We want to thank our employees. Like they're all the same for 2020. So, you got to just kind of have some context there on that year as well. But I'm telling you, as an investor, it is a very valuable, it is time well spent to go look at those annual reports. And if you're not willing to do that, right? Most people, if you're not willing to do that, you don't want to read, you don't want to do your homework, you got to hire a nerd like me to do it for you. And there's nothing wrong with that as well. So, I get compensated very well to do this for people and to stay. But it's a responsibility, and I enjoy it. Like I actually enjoy reading these, which just shows you where my mental craziness is at. So. I hope this was helpful for you. I just can't stress it enough. If you're investing on your own, this is such an important piece for you. I'm starting to get other financial advisors that listen to this. And so for them, for your clients, read those annual reports, look at what companies are doing. It's very, very important. So remember, this is for education and entertainment purposes only. So please talk to your financial advisor before making any kind of investment decisions. But again, I hope this was helpful for you. I appreciate your time. Don't mistake activity for achievement, and I'll see you next time. Thanks, everybody.